Hi everyone, my name is Jardee Kininmonth and I'm the Managing Director of Future Metals. Future Metals is progressing the Panton Platinum Group Metals project in the East Kimberley in Western Australia. It's one of the most mature and high-grade PGM deposits in Australia. And we're also looking to make a significant nickel sulfide discovery next to that existing deposit, and we are currently drilling as we speak. Just pausing there to note the disclaimer, and clearly any investor looking to invest in Future Metals should do their own due diligence before making that decision. So as I said, we are progressing the Panton PGM project through development and into production. What we're looking at is a long life, low capital and high grade operation. And we're looking to deliver a scoping study outlining the framework for taking that project forward in Q4 of this year. It is going to be a low capital operation because it is such high grade. It's one of the highest grade undeveloped PGM projects globally, and certainly the highest grade in Australia. So that allows us to take a low capital approach, and similarly its location is highly beneficial for that. It's located next to all the requisite infrastructure up in the East Kimberley there for progressing a project of this scale. Location is another, is an important point to touch on at a more macro level. The majority of PGM supply does come from Russia and South Africa, clearly two challenged investment and operating jurisdictions relative to Western Australia. So there's significant strategic value in our Panton deposit there as well because of that. Metallurgy is a big focus for PGM projects, and we've had the benefit of a raft of work behind us to basically craft a highly economic flow sheet that looks at producing a bulk nickel and PGM concentrate for sale to smelters, or alternatively we can process that further ourselves using hydrometallurgical processing techniques to produce very high grade semi-refined PGM and base metal products for direct sale to customers. And that has the benefit of having higher payabilities and a relatively lower emissions footprint than sending it into the smelting market. On top of that, we're also looking at potential tailings leaching through that flow sheet, and again that will produce semi-refined high-grade PGM products for direct sale to refiners. And lastly, we have a very chrome-rich deposit at Panton, so there's a lot of chrome associated with the nickel and PGM. And what that allows us to do is look at producing a high-value chromite concentrate for sale into the ferrochrome industry as well. So you can see there we are extracting the maximum amount of revenue per tonne of ore that we're pulling out of the ground that we can. And to add to that, mature flow sheet that we have developed, we are in a great place to progress the project forward at an accelerated pace, given all of the prior work of prior owners. When we acquired the project, there was a significant amount of drilling, a significant amount of study work, and there was also a decline already developed into the ore body, down about 100 meters below surface and circa 450 meters of development. What that allows us to do is potentially look at opening that decline, doing bulk metallurgical test work to support an accelerated bankable feasibility study, and ultimately bring the project into production much faster than any of our peer undeveloped projects out there. It's worth noting there as well that we are sitting on granted mining leases. So just wanted to touch a bit more on the PGM market. PGMs are primarily used in catalytic converters, as well as a raft of other niche users, as well as jewelry. But one of the key growth markets for platinum and palladium is in the hydrogen industry. It's a key input into hydrogen electrolyzers and fuel cell electric vehicles, and demand is expected to grow significantly on the back of the amount of investment that is flowing into that sector on the back of the Inflation Reduction Act out of the US and the EU's Green Industrial Plan. So there's a big big increase in demand out of that sector for PGMs coming, and certainly analysts are predicting that platinum in particular is going to go from its levels of circa $900 an ounce to up to $1,500 an ounce by the end of the year. And to add to that, in terms of tailwinds at a macro level, the supply side is incredibly shaky. So 80% of the world's platinum and palladium comes from Russia and South Africa. All of that Russian supply is basically going through China, which leaves South Africa as the lead supplier for Western consumers, and it is a very challenged operating jurisdiction. It's only recently come out of a state of emergency due to the rolling power blackouts that were occurring there. And certainly a few months ago, we had all the major PGM operators there saying that the conditions were untenable for their operations, and certainly it's crueling any ability to make further investment decisions into that jurisdiction. To add to that, PGMs are an incredibly rare metal. They're about 10 times more scarce than gold. They're certainly a lot more rare than rare earths or lithium and copper, where we're obviously seeing discoveries being made every second week. That's just not the case with PGMs. So what we have at Panton is incredibly valuable in that it is the highest grade or one of the highest grade undeveloped PGM projects globally, and it sits in Western Australia. So that's a huge inherent real value there. So to add to the value of the PGM deposit that we're progressing the scoping study on, we're also looking to extract more value out of our significant land holding through attempting to make a significant nickel sulfide discovery to complement that existing PGM deposit. The reason that we're undertaking this exploration work is because of the compelling historical results that we've uncovered over the past year, including intercepts of 4 meters at 1.2% nickel, 1% copper, and 2 grams gold, which sits outside of that existing resource in a totally different type of mineralization. Intercepts like that give us confidence that this area and land package that we sit on has been subject to multiple magma pulses and generated multiple styles of deposits. I guess what gives us further confidence is the amount of work that the nickel and lithium major IGO is doing in the same region. They've picked up a lot of land in the East Kimberley and West Kimberley, and are out there looking to make a discovery as well, because they know what we know, in that it's a highly fertile ground for further discovery. And this exploration model is supported by an expert in this style of geology, and that is John Hronsky. So we've got an incredibly strong team pushing forward the nickel sulfide exploration aspect of our business. So in terms of what we have coming up, as I say, we are drilling out at site currently, looking to make that next nickel sulfide discovery, and results from that drilling will be coming out through July and August. We'll follow that up with a detailed geological and soil sampling exercise over some other prospective areas. And then based on the results from that drilling and the mapping, we'll make a further decision on follow-up exploration work into the back of Q3 and through Q4 there. Currently, we're looking at wrapping up a new JORC resource model, which will then allow us to wrap around mine design and flow sheet design work to deliver on that scoping study in Q4. And parallel to that, we've got a number of flow sheet optimization and variability testing programs underway across the various unit operations that make up our flow sheet. That's it from me. Thanks for taking the time to listen, and please reach out if you would like to have any questions answered or arrange a call.